There's been a lot of equity market volatility lately, and while it's always difficult to manage portfolios in a volatile environment, one silver lining, perhaps, is the ability to generate tax losses, reduce the tax burden of the portfolio, and something we refer to as tax alpha. So Mary, maybe you can tell us a little bit about how does the current market volatility impact investors that are already invested in tax-efficient products?
Yeah, so market volatility as well as market declines help increase the opportunities to realize losses in client portfolios and adding after-tax outperformance. What's really important during this time of increased volatility is that tax managers are looking at their portfolios daily and they're trading on a regular basis. We want to capture those opportunities that the market provides. And we did that on our platform. We traded 20% more in terms of the number of buys and sells we executed. And that resulted in about a 90% increase in the amount of losses that we captured for clients. This is reducing the client's tax burden, and it can aid in wealth accumulation over time.
So what about investors that are not currently invested in tax-efficient strategies?
So for any clients who might be considering transitioning assets into a tax-managed account, now might be a good time to take a look because the value of those in-kinds may have decreased, allowing for a lower tax burden in transitioning the assets. If you have concentrated stock, such as single stock positions, ETFs, or mutual funds, you might also be facing a lower cost of diversification. If you had a tax-managed portfolio alongside those concentrations, you might take a look to see if you've had any capital losses realized in the recent times so that you can help offset any gains in reducing those concentrations.
So Mary, the big question, during this period of elevated equity market volatility, was your team able to generate tax alpha?
Yes, we did see significant tax alpha generated across our client portfolios in the first quarter relative to the previous 2 quarters. And the goal of a tax-advantaged equity strategy is to provide pre-tax returns that look similar to the equity benchmark while adding after-tax value over the long term in any market environment. Market volatility creates additional opportunities for us to be able to generate tax losses to increase value for clients over the long run.
Thank you, Mary. No one wants market volatility, but the silver lining here is the ability to harvest losses and generate that tax alpha.
Thanks, Mike.